It's going to be the best episode ever, so make sure you watch every single minute of it. Stay with us. So we're actually going to have a new segment, Markets in a Minute.
Here we go. So good response from equities this week, generally up.
And this really brings it to life. When we look at how markets have performed over this period, you can see there the big balanced solution, the most popular there, up around 45% from the launch in 1st of October 2015.
What is it, the actions that you guys take in terms of that performance? What is it that's driven that performance upwards in terms of the day-to-day actions of the investment management team, what goes on behind the scenes at True Potential?
And see, things have recovered a little bit as well.
Certainly not hearing in the media about how the UK stock market has outperformed and performed so well this year.
Let's bring it back to common sense. So the question I've got for you, and I'll put this to you first, Kevin, what is the true context of 10.1% inflation?
So I think...
But I think because I've made such a potential dog's ear of this podcast... Hello ladies and gentlemen, and welcome to episode 131 of the Do More With Your Money show. So for 130 episodes, I've been sat behind the scenes here, directing, producing. This week, Chief Executive Daniel Harrison, he's let me loose on the panel. So it's going to be the best episode ever. So make sure you watch every single minute of it. Stay with us. Subscribe to True Potential YouTube channel as well. I'll get that message in there now. But firstly, let me introduce my star panel. As I told Dan, I'd do the show if I could have the very best. So I've got the main man, Jeff Casson, Chief Investment Officer, Kevin Kidney, Investment Director, and my good pal Tom Robert Shaw, Financial Advisor. And we're all excited, we're all buzzing, I'd say, for what's felt like a much better time recently in markets. Like, I know for me, when I'm logging in at the minute, it's a great way to start my day. Investments are up, I'm feeling good about it. And that's what I'd like to open up to you guys firstly. Tom, what excites you about an investor at the minute? What excites you about markets? What excites you about your job? Tell us.
I suppose at the moment, I think it's probably that I'm getting a lot less performance calls more than anything, which has been quite nice because it's allowed me to, really look at giving proper financial planning again. I mean, a lot of the time we are talking about the markets, but the last 2 months have been pretty positive, really, in terms of sentiment and what's been going on.
It's nice coming into work and just like right away, like having a chat with you guys. Like it feels like a better atmosphere. It does feel to me. Like, I mean, I'm speaking as a client here as well. It feels like to me a corner's been turned. Now, I know that might not necessarily be fully the case. Long-term investing is a bigger picture. But it is just nice after the first half of the year where it was a bit more rocky to start seeing maybe those green shoots kind of coming out of it. I feel good about things. You feel good about things. Jeff, are you feeling good about things?
Well, as you say, Graham, it's good to see markets at least stabilising and starting to show that bit of a turnaround, and that does help, I think, with everybody thinking about how asset markets have performed. I think the key thing there really is from a multi-asset, from a perspective of True Potential, it's always giving us something to think about. It's also giving us something to consider from a client perspective, and that's what I suppose is the beauty of multi-asset. We get that opportunity to look
and
at various different.
You talk about the beauty of that. Today, things are going to be very different because we're also going to have a lot of visual beauty on this show because we're going to be popping the green screen up in a bit. Jeff's actually going to talk through some of the performance, so keep tuned for that. Yeah. Jeff, any more to add to that?
At this point,
are you going to save all your magic for when you've got?
I'll save that for the
when you've got this chart up in front of you. So, Kevin, what excites you?
I think the first 6 months of the year were difficult for multi-asset portfolios. What's good to see over the last 6 weeks to 8 weeks is that things we would describe as diversifiers are beginning to work a little bit as diversifiers. So fixed income has, started to generate some positive gains to help with the lows in equities, and so that's helped contribute to what you've just described, which is we're all seeing in the apps when we log in that investments are up. So it's good to see that traditional portfolio management is coming back to the fore a little bit, and diversifiers are adding to some of the positive gains we've seen in the last 6 weeks.
Yeah. So in terms of speaking about what has been happening recently, we promised this episode would be different than all the others. New things coming. So we're actually going to have a new segment, Markets in a Minute. Podcast segment, Markets in a Minute, is exactly that. 60 seconds, wrapping up morning markets for the week. Kevin Kidney, what has been happening? 60 seconds starting. Let me just get this now.
Here we go. So Good response from equities this week, generally up, except China. China's weak. We've discussed this in the Morning Markets podcasts, more about reaction to rolling COVID lockdowns, also worries about the domestic property market there, seeing a deep contraction that's feeding through into equity prices. Bond markets, particularly in the UK, softer this week. We've spoken in the UK about CPI being a surprise. We saw a big surprise in headline inflation beyond what the Bank of England were expecting this week. That presents some challenges for communication going forward through the rest of the year. Good news on UK employment data though. We're only 250,000 jobs short of where we were pre-COVID, so the jobs market continues to recover well. We're also seeing a decline in the number of people unemployed, so we're just about, on this other side, about 280,000 people needing to come into work, and the unemployment level is back to where we were before COVID.
There you go. 56 seconds, Kevin.
Well.
This is why he's one of our best morning markets presenters, and actually every time Kevin does come in the room, the first thing I do is message Sarah Miss, and kid is what a star, what a legend. Love working with him.
Good to hear.
Still the main man, Jeff. Though, so.
Thank you.
There we
Pleased
go.
to hear.
Yeah. Well, that was very good, and for me, I did feel like it was an interesting week. I think the China lockdown stuff, that was interesting. Obviously, UK inflation 10.1%, a little bit higher than we thought. So there has been a lot of talk about, and for our clients, the way to keep updated is subscribing to the True Potential YouTube channel, because every day you've got the absolute best in the industry here to talk about it. Sometimes with yours truly, and maybe sometimes as well with, well, you can't see him, but maybe in the future, some other guests. Let's move on. This next segment I'm calling Big Screen, Big Money, and this is what the viewers have stayed for. We're bringing out the Hollywood stuff, we're bringing out the big lights, the special effects, and Jeff is going to man this segment, so let's roll.
Thank you, Graham. And what we can see here is a table of the performance of the True Potential portfolio solution going all the way back to July 16. Let's bring up a picture of that just in a chart. And this really brings it to life. When we look at how markets have performed over this period, you can see there the big drawdown that we saw in the midst of COVID, the subsequent recovery that markets have delivered, and then just looking to more to where we are today. Yes, we can see that downdraft that we were discussing at the start of the show, but then that strong recovery that we've seen over the recent 6 weeks. So we can see here the performance of asset markets over the course of the year-to-date period, and really they belie a number of underlying factors that have been happening within multi-asset portfolios. Tom at the start was mentioning those difficult conversations that have been had with clients, really helping them to understand the context of delivered performance. And nowhere else is it really very evident than the US in terms of the very strong recovery that we've seen in asset markets over probably the past 6 weeks, when we go back to the middle of June, around 16th of June, when markets started to recover. At that point, the S&P was down around 24-25% over that period. So you can put that into the context, now down 8% for the year-to-date period. In the NASDAQ as well, in the US, probably down closer to 30%. So a very strong recovery that we've seen there in equity markets over that period. So leaving us with global equities now down around 10% year to date. I think the middle part of the table is really quite interesting in terms of what we've seen in sovereign bond markets in particular this year. And that ties back into some of those points that Kevin was making right at the start there around how sovereign bonds have now started to provide some of the diversification characteristics into multi-asset portfolios. Tying a few other things together, really, if we look down here at what's been happening in oil markets, yes, it's up around 19% over the course of the year-to-date period. It does sort of mask the quite significant volatility that we have seen in oil markets. We go back to February and think about the challenges that we saw there, the very significant spike in oil price up to around $125, $130, but moving back today to around $90. So quite a significant decline, but clearly that continues to feed into that hot topic that Graham mentioned at the start, that of inflation and that 10.1% reading that we had here in the UK this week. So bringing that all together, we've seen the long-term performance in terms of the chart of the True Potential Portfolio Solutions. We've seen how asset markets have performed over the course of year to date. But really, what does that look like then in terms of overall returns for clients? And you can see here we've got, since launch, the performance of the True Potential Portfolio Solution, our balanced solution, the most popular there, up around 45% from the launch in 1st of October 2015. But what does that mean on an annual basis? Something that's more considered for each of us to think about. Well, the balanced portfolio there delivering 5.6% on an annualised basis since inception of this portfolio solution. Stronger performance obviously coming through as we move down the risk spectrum. Aggressive delivering 8.6% on an annualised basis.
Right, thank you for that, Jeff. And as if by magic, I'm back on this side, you're back sat down. It's the special powers of the studio. That was really interesting, and I think for me as a client, that is where my excitement comes from when I see charts like that, when I see, so my investment journey with True Potential started in 2017, and that's why for me I haven't really panicked this year in terms of when I've seen it go down.
That's the important point, isn't it?
Yeah.
That we're thinking about it from the long-term perspective.
Yeah.
It's about using client capital as they're investing through time, and it's about focusing on those longer-term goals.
Yeah, I think I agree on that point. I think obviously the whole thing of investing little and often is always a thing that we always say is very simplistic, really, but it's something that clients should be really focusing on. If you look at it, you can look at any sort of fund performance over a short-term period, and we always say you can be susceptible to volatility over short-term periods and obviously longer-term periods as well. But the key thing here is with investing, you've always got to look at more than 5 years in terms of putting money in from a compliance perspective. That's what you've always got to be thinking about. So that's fairly long term. And if you look at the performance of the portfolios over that term, it's they've done pretty well. A lot of the clients that that we're speaking to, they're always questioning risk. I think that's probably the key thing that they're questioning with us as an advisor. Really, is should I be changing my risk? Now, from our side of things, you can always complete a risk tolerance questionnaire to determine what your risk is. But if your long-term goals and objectives haven't changed, and your risk tolerance comes out the same, then you shouldn't really be trying to let emotions dictate what your risk is.
Yeah.
And it's just about having that, again, we always, say long-term perspective is really, really important. But, if you let emotions dictate what you're thinking in terms of risk, you can really come off quite badly as a result of that. I mean, prime example of that is if you reduce the risk down in June, you wouldn't have seen any of the growth that we've seen recently, or as much as of the growth as what you would have seen if you stayed investing in the same portfolio. Again, we saw that with COVID. When COVID, because it was so quick, in terms of the market crash that we saw, clients moved quite quickly when we were telling them not to, and as a result of that, the longer term performance over the next 6 months.
And I suppose that's the thing, isn't it? To earn a return, you have to take some level of risk.
Yeah.
Yes, as long as you're taking the risk that's commensurate with your own sort of risk tolerance questionnaire outcome, that's crucially important. And from us, it's also about risk.
Yeah.
It's risk of allocating capital to certain areas and thinking about the different risks that there are.
It's something that strikes me as thinking back is what our CEO Mark Henderson said about it's time in the market. It's not trying to time the market because you'll typically be left disappointed. So it is about patience being a virtue, as uncomfortable as it can appear and feel at times, particularly this year. So I think those who have been able to be patient hopefully have benefited.
Yeah, I think the other thing that would interest our clients when they see that chart, what is it, the actions that you guys take in terms of that performance? What is it that's driven that performance upwards in terms of the day-to-day actions of the investment management team? What goes on behind the scenes at True Potential? Do you want to just talk a little bit about what life's like up on the team?
Yeah, I think there's a lot of aspects to that question about what's happening on a day-to-day basis. And I suppose the key thing there is that the team, all of us, we're living and breathing what's happening within those portfolios between ourselves, the investment partners that we work with. The level of change that happens, there's a lot of change has happened in the portfolios over the course of the year to date, be that reducing some of the equity exposure, the role that alternatives have played in it, and then using the periods of volatility to potentially add to certain areas of asset classes. And a good example of that is thinking about how some duration or fixed interest has been added to the portfolios, and that has been a positive, because we can think about the volatility that we've seen in sovereign bond markets over the course of the year. It's presented opportunities, and that's what we want our investment partners to be doing, looking for opportunities in asset markets as they present themselves.
Yeah.
That's just part and parcel of what we want to do.
I think that's a common thing that I've been saying to clients, to be honest, is it gives you opportunities when you buy in at lower unit prices. It gives you guys a chance to realign the portfolios should you see fit. Yeah. And I think clients often underestimate that. That this is when fund managers can be looking to change if needed.
And within the true potential solution, there's obviously that two levels of change that happens. There's the change that's happening with our partners and what they're doing to the underlying funds, and then there's the allocation changes that the team are making as well to those underlying managers.
I wonder how challenging has it been the last year in terms of what's happened, and how normal is that in a long-term investment? Is this just part of the course? We will have cycles like this, or has it, like we talk about that perma crisis where it has felt since 2015, Brexit, COVID, Russia, Ukraine. Is this unusual, or is this just what we should expect in a 30, 40 year investment?
Well, I think we have to be sympathetic that we are still coming out of the impact of COVID. So most economies now have fully recovered. But
and we talked on Morning Markets about that today. A lot of the inflation potentially is basically the hangover from COVID.
Exactly, and the way we choose to measure
much money
and the way we
system.
choose to measure data, it's always versus last year, and last year was heavily impacted by rolling lockdowns in Europe and the UK and the US. So I think, I would hope that what we have seen the last couple of years in terms of market volatility is not par for the course going forward. I would hope we can see a return to the long run low volatility we saw in the 20 years prior to COVID. I'm quite confident that when inflation begins to roll over in the Western economies, which should really take hold early in the new year, that we can all get through this, and asset markets can adjust and become a bit more focused on growth instead of inflation.
Yeah.
I think a point just to add to that, I think people often think that bear markets aren't normal. I mean, they aren't normal to the extent that we've had the last 2.5 years. But since the last World War, I think there's a something out there that says it's about every sort of 5.5 years you'll get a bear market, which is like we said before, it gives opportunities. It's not nice, it's not comfortable, but I think one of the things with having everything online with us is clients can actually get not used to seeing it because it's not normal at all, but they can actually see when bear markets happen and then how they recover, and that gives them an education, I think. And
certainly gave me confidence in terms of having gone through the COVID year and seeing my investment at the end of that year looking quite good.
Yeah,
that gave me confidence this year through the Russia-Ukraine to stay in my seat. And
the other thing there is it's about how it's portrayed in the media.
Yeah.
So very much as we've been through the first real 6 months of this year, it's been a very negative story about how asset markets have performed downwards, etc., etc. But what we haven't seen is really any front page news stories about the slight improvement that we've seen in markets over the past 6 weeks. So it's also about using that technology to keep abreast of what is happening, using morning markets, etc., just to check in and see things have recovered a little bit as well.
Certainly not hearing in the media about how the UK stock market has outperformed and performed so well this year in what has been a bear market for global equities. It's just not something the media really wants to cover. It's actually
going
really
back to our table, the FTSE 100
exactly,
we've got there up around 4%.
You won't see that in the BBC.
What's happening next? Are things settling down, or is it probably we're still in for the long run here?
I think it's a really difficult one. Geopolitics is something that's there for us all to contend with. It's not there for us to take a view really on, is that a good outcome or a bad outcome? We have to navigate our way through that, think about how we can use diversification, the different assets that we have available to ourselves. So it's there as a risk, and it will remain a risk until, as you say, there's some resolution to it. But it's
is that the biggest issue, or is it the inflation? Like, what is it at the minute which is holding markets back?
There's always something for markets to contend with. I think from our perspective, if we think about it, it's the trajectory of inflation. Where does that go? It's been driven, as Kevin says, by the reopening, supply challenges, but also then exacerbated by what we've seen in Russia with natural gas, particularly for Europe. There's also the consideration of China. China is as Kevin was alluding to earlier, rolling lockdowns. That still has to change to allow that economy to really reassert itself and start to recover from a domestic perspective as well. So there's a few things that are there in the background that we have to be very much aware of and think about how they can act positively in terms of contributing to a broader sense of growth at this point in time.
And Kevin, what is it that you'll be looking for in terms of?
I think for the UK, it's how the new Prime Minister, whoever he or she is, tackles the energy story in the UK.
Yeah.
So if we take, for instance, the German government today agreed with their coalition partners that they will not pass on any more price rises to their consumers. So they allowed a one-time €500 rise in energy bills, and then they've capped the bills, and they've pledged to cap them for 18 months. In France, effectively, President Macron has said to EDF, you must take the hit. So they have capped energy prices to some extent there as well. So there is the power for a Prime Minister who wants to make a forceful statement in the energy market and allow the UK consumer to just get through this winter.
Yeah.
It's just whether they want to use the breathing space they've got.
Yeah.
So certainly be looking to see if, given the promises that have been made about some fiscal initiatives, if the new Prime Minister, who may well be Liz Truss, is willing to grasp the nettle and help the UK household and consumer through the winter.
And Tom, in terms of clients and advisors you're speaking to, what are the key concerns there, and do they match up really with the reality of it? Like, for example, myself, like Russia-Ukraine feels like the big issue, but I think when I talk to you on morning markets a lot of the time, Jeff, there's a lot more going on. Yeah. What is it your clients and advisors are concerned about?
Yeah, I suppose for us we would probably see it when we're looking at drawdowns, because when we're providing drawdown income, is that going to be sustainable for the clients? Now, at the minute, we haven't had to adjust that many drawdown income for clients at the moment. I suppose time will tell in October, but if these energy prices going up, if that will mean more work for us in terms of actually having to adjust it and actually seeing it physically. But at the minute, we're not actually seeing it with clients. That's not to say that we won't further down the line in a few months.
Potentially in for a tricky winter, but we will see how we navigate that.
There's plenty of breathing space for the government to do something, though. I mean, you're seeing it in Europe, what can be done. So they have a roadmap. They have there's clearly an agenda to help households.
Yeah.
It's just whether they're willing to take on difficult parts of the political spectrum.
And I guess one thing with Liz Truss and Rishi Sunak at the minute, they're kind of playing more to like the Conservative base who are voting for them, rather than like thinking about. Yeah. They just want to get in power, and then maybe when they are in power, maybe it will be a different.
And that's part and parcel of the challenge that the markets have got at the moment. That it's unknown what they can do, but they can certainly do something. It would be good to get us to the 5th or 6th of September when we find out who will be the new Prime Minister and how they set out their policy agenda from there.
Yeah, well, coming up in a bit, we'll actually have a political segment, so let's not talk too much about Liz Truss or Rishi Sunak just yet. I'm going to see Kevin Kinney's excitement here at the thought of that. But moving on to our next segment, which is our Common Sense segment. So in our Common Sense segment, I think for Common Sense, I envision this to kind of be the more like realistic, real story. You've had inflation on the news all week. For me, watching some of the news coverage, it's felt a little bit sensationalised. Let's bring it back to common sense. So the question I've got for you, and I'll put this to you first, Kevin, what is the true context of 10.1% inflation?
So I think first and foremost, the inflation impulse that we're seeing in the UK is a global phenomenon.
Yeah.
So we've seen...
and I think that's a good point right away, because you do watch the news and it feels like UK disaster. Yeah. No, it's absolutely a UK thing, and I think that's exactly what I'm on about in terms of common sense. It's a global thing, so carry on.
Yeah, so inflation through the summer in the US was at 9%. It got close to that in Germany. In Canada, Spain, France have all seen similar levels of inflation. The UK is slightly different in the way we choose to measure and administer energy prices. However, it's important to point out that this month we saw inflation in the US fall a little bit, same in Canada, same in some parts of Europe. So there's already signs that this acute inflation impulse globally has reached its peak and it's rolling over. The UK will lag a bit, but we're quite hopeful that soon, hopefully by Christmas or the New Year, we're starting to see a decline.
I mean, certainly my feeling has been life goes on in terms of, it can't just stay like that forever. It can't keep going up forever. We'll adapt. It's a long-term thing perhaps, but this is how it works.
Yeah, and
Jeff?
I think a component part of what we're seeing in inflation is very much things that we can't really control. It is about energy prices, it is about gas prices, and those feeding into the overall inflation level. So as Kevin says, starts to roll over, that can be very influential in terms of the inflation rate. We cast our mind back just to earlier in the year. Oil was around $123 a barrel. It's fallen back to that $90 a barrel, so it's fallen 25% from its peak. That has to feed through into the inflation readings. The other thing in the UK, I suppose, we've got our £400 rebate that we'll see. There's a lot of debate with the ONS as to how they're going to treat that. So it might be that we don't see the inflation peak at 13%. It might actually be below that, depending on how that's dealt with as well. So there's a number of nuances, I suppose, to what's happening in the UK inflation at this point in time. A situation also influenced by what we've seen in sterling. So we saw in those charts earlier, we looked at sterling falling around 10% against the dollar. We think about that, energy prices in dollars.
And Tom, just tell me your thoughts in terms of what you're hearing from clients.
Specifically at the moment, I mean, you will get the odd call, and rightfully so. I mean, but at the moment, it feels like we haven't had anything through really at the minute. Like I said to you before, drawdowns haven't really been altered at the minute.
We'll see what happens. We'll continue to monitor inflation, and the place to do that is subscribing to the True Potential YouTube channel, Jeff and Kevin, and we'll see what happens.
It's certainly something that will continue to be part and parcel of how we think, how we talk about what's happening in asset markets with our investment partners, because it feeds into that other aspect of interest rates and how interest rate policy will have to change and will continue to change over the coming months. So it's a crucial issue, going back to one of your earlier questions around what are the things that you keep thinking about. Well, wouldn't be surprised that if you went upstairs to the team, inflation is probably talked about every day, if not several times a day, because of the amount of data that there is there.
Yeah. And it has become one of those challenges even for this show, to do more with your money show. Like, inflation this year has been the key
theme.
Last year it was COVID, the year before we had Brexit. Inflation this year seems to have been our key theme, and that's the story. So we'll continue to keep you updated. The next thing we're going to talk about, I think this show works best when we get on to politics. Certainly in the early days, I think back to 131 episodes ago when we first launched this with David Harrison, and some of the great political chats we had back in the day. So for my first episode, I want to bring a bit of politics into it as well. So our next segment is political impact. So then, ladies and gentlemen, political impact, and the story that's dominated the news this week, Liz Truss and Rishi Sunak, has been comments Liz Truss made on terms of UK productivity and the kind of mentality of UK workers compared to some of the foreign counterparts. I wanted to bring this to the table, really. Obviously, it's an economic issue. Are we less productive than other countries? I'll put it to you, Kevin, first of all, in terms of your thoughts on Liz Truss's comments, and in terms of your thoughts as well in terms of the economy and productivity.
Well, the way we choose to measure productivity, the UK has suffered since the global financial crisis in 2008. So productivity growth was quite buoyant before the crisis and has cooled considerably and flatlined since. I think where the UK is not alone is that we have about 1 million vacancies in the UK, can't match vacancies to workers. Same problem in the US, same problems in continental Europe. The legacy from COVID is this massive disruption on job markets. If government can somehow come together, the different wings, and make it easier for companies to recruit people, which might involve a visa system, take back control, we could raise the overall aggregate level of growth in this country quite quickly by matching young economic migrants with those available vacancies.
Yeah, and Jeff, your thoughts on this? I mean, it was a conversation we had on before morning markets this week.
I think the other aspect to that is also thinking about policy. So immigration might be one of those policies, but it's also about how to stimulate investment in the economy, which is really something that we haven't really seen in the UK.
Yeah.
Investment by corporates, investment in research and development really lags behind when we look at ourselves relative to the G7. So investing as a percentage of GDP is very, very low. We need to find ways to allow that, be it tax incentives, be it an encouragement of schemes that allow companies to invest in productive assets.
One thing I brought it back to when we were talking about it was in terms of the culture shift as well, in terms of working from home and the way things have changed in the last few years. You had furlough as well. Like, is the potential, the risk for a cultural shift, and I think this would be a long-term thing where people just aren't exposed enough to the way we used to work.
I think there's a challenge. So I think what COVID did was it took a 25-year trend and basically compressed it into about 12 months. Now it's an enormous opportunity for, I think, experienced professionals who have a work-life balance, to be productive, but also to manage their affairs at home. I think there is a challenge though for managing young people, graduates and analysts here at True Potential, making sure they get the right mentoring, the right face-to-face contact, and that probably requires more time in the office and working beside people than is afforded to others who can work from home.
I think what's made me stronger in my career is exposure to being uncomfortable at times. And do you have that long-term trend over 10 years that could get people to...
It's going to be a fascinating topic for us to look back on 10, 20
and
years down
you're
the
already
track.
potentially seeing that change. I know some of the Silicon Valley companies have switched back, and even was it some of the investment banks as well?
I think everybody's trying to find out what works for them, and the real sort of challenge is that everybody has a different objective around it, and we need to find a way that we can corral people to deliver the best that they can deliver for themselves, but also for business.
I was going to say, I suppose it might be dependent on what sort of job it is as well. So you can be in a job where you actually need to collaborate a lot more. So maybe creative industries, you need to be in the office a little bit more. Whereas something where you just maybe looking at numbers all day and you don't need to be collaborating at all. You could probably be more productive at home, I suppose.
I think it does come back to that point of how people learn, how people develop, and certainly having face-to-face conversation, or not even that, but listening to what's happening around you, picking up things. That's impossible when you're working in front of a screen. But when you're in the office environment, it certainly is live and it is real for people to learn.
I think just going back to Liz Truss and the comments she made on the UK worker mentality, and I think to me, she does seem to be quite a good candidate in terms of a capitalist kind of mentality of moving things forward.
There's no such thing as a debate really anymore. One side isn't really giving their opinion. The other side is just, getting, blasted by the media, so they're not actually, they're scared to make an opinion as well. And that's half the problem is the media to some respect is, it's so harsh, I suppose, on certain, on both parties, I suppose. If the Labour Party was in power, they'd be harsh on them as well. And I think it's just wrong because you actually need debate, and you need to be, sometimes just look back and say, actually, no, I don't agree with that. What I've said in the past, actually, I've now changed, and this is why I've changed.
You did meet Jeremy Corbyn once, didn't you?
I did.
Do I remember that?
Yeah.
Have you got the photo? We can put it on the edit.
No, I'm not. I haven't got a photo with him, I don't think.
What was he doing? Was he just in the pub?
He was in a coffee shop, yeah.
Coffee shop. Seems like a coffee shop kind of
Yeah,
thing.
it was. It was.
Not the
I think
pub.
it was a vegan coffee shop. I was just walking past it, to be honest, but
What did you chat, or was it just a hi?
it was just a hi. I didn't really want to chat to him.
The only one I met was Matt Hancock when we did the tour here. But we do have Liz Truss who actually opened the building, so if she does win, we can change our sign to opened by the Prime Minister. There we go. Right then, the next segment was going to be behind the scenes at True Potential, but I think because I've made such a potential dog's ear of this podcast, I think my guest Esther has probably left the building. So behind the scenes, we'll save our Great North Run chat for a future episode, because I know Kevin Kinney wants to get to the pub with me right now.
Come on.
I wonder what are we doing this weekend, and what are we doing after this podcast, and how stressful has it been? Start with you, Tom.
Well, I'm actually going climbing, which
Excellent.
it's I sort of tend to go every week or so with a few colleagues actually from here as well. So that's what I'm doing after this.
How bad was my first show hosting?
That was good. It's entertaining from behind the scenes.
The edit's going to look amazing.
I've got a question for the girls. How long do you think this show actually is?
Over an hour.
Good. I've got enough content to make a good. I've got enough good content to make a show.
Yeah.
You're gonna have to go to bed early tonight, I think. Get up early and do it
It'll
all.
be a 5 o'clock start to fix it.
I'll smash it in the morning. We've got Katie presenting morning markets with Kevin tomorrow,
Yeah.
so they can do that, and Sarah can
Bright
do
and
the
early.
edit, and I will smash the podcast. So Kevin, me and you are going for a beer after work. Jeff, what
We
are
are.
you doing
I'm going to
tonight?
head up the road and hopefully catch my son playing rugby.
Yeah, well, I apologise for keeping you all so long. We'll see how this turns out. I found it exciting anyway. And as we go back to the original point, how your money is going in 2022, I am excited about it. I do feel good about this year. I am enjoying logging in and seeing my performance up. So keep up the good work, Jeff and Kevin.
Thank you.
And thank you very much. Ladies and gentlemen, it's been a pleasure. I might never be back on this podcast after this, so I do hope you enjoyed it. Thank you to my production and director team here, Katie and Sarah, my two absolute stars. And ladies and gentlemen, subscribe to the True Potential YouTube channel. Morning Markets is the place to keep updated with everything we've talked about, inflation. Thank you very much. Goodbye.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.